Last week I talked about the streets are talking, but I think this week the streets are in an uproar. Gas prices, high interest rates, inflation, all that stuff. What's going on?
All right, Suzette, let's not go crazy. Right? Let's keep this simple for people, right? People still want to buy homes. And while there's some challenges out there, let's keep it to what we know, real estate, and help people understand that it's not as bad as they think.
You know what? That makes sense. So, welcome to Real Estate Made Simple with Suzette and Scott. We're back, you guys. So, today we're going to tackle the Fed hikes and also mortgage interest rates.
Perfect. I know about that.
My name is Suzette. I am a local realtor here in Northern California, specifically Sacramento and the outlying area. I live here, I work here, and I connect community. My ultimate goal is to give all my clients white glove service, whether buying or selling their home. And for sellers out there, I get the most money in your pocket. I'm not just talking, I have a proven track record. So if you are on your real estate journey, please contact me.
And I'm Scott Thompson. I'm a loan officer here in California. I work for Loan Depot, and I really just try to help people build wealth through real estate.
Scott, what's going on with those Fed hikes?
You know what? It's a great question, and I think it's caused quite a bit of confusion. There's a major difference between Fed and Fed hikes and what they mean and what they're meant for, and mortgage rates. So I think we should really just kind of dispel any myths. Those are they're hearing that the Fed's going to hike rates a quarter of a point, and what does that mean? And what it really means, the function of the Fed is they try to slow or keep the economy strong. In this case, we're talking about inflation. And one of the tools the Fed has to slow the economy, slow inflation, is by raising the Fed rates. This, however, is different than mortgage rates.
Okay.
Those rates go up every single day, whereas a mortgage rate is over 30 years. So mortgage rates are primarily driven by inflation, right? Inflation, let me try to make it simple. As inflation creeps into the economy, everyday people like ourselves, like your paycheck doesn't go as far as it once did. Or when you go to the grocery store, you used to spend, say, $100 on groceries, and now you look at the bill and it's $125 for the same amount of groceries. That's where you can feel inflation.
Yeah, I feel it. I feel it all the time, Scott. Yes.
Yeah. Well, so bringing it back to real estate and mortgages, right? So that erosion in purchase power, right? A lender has to increase the interest rates to make up for that. And so that's what you're seeing right now is interest rates are going up really due to inflation. Go ahead.
Yeah. That completely makes sense. And I know that people out there watching knows that the grocery prices have went up, and I can't even believe I'm spending over $100 just to fill up my tank in my car. So I'm sure everyone is feeling the pinch.
When the Fed hikes rates, what they're trying to do is curb inflation. And when successful, actually, we're going to see interest rates come back down.
You know, I think a lot of people are going to be happy about that, especially me.
Well,
you know, Scott, go
oh,
ahead. Go ahead.
Oh, no, I was just going to say, it's just not something that's going to happen overnight. So people have to be ready to be in this a little bit for the long haul.
Yeah, definitely understand. You know, I really relate to that because back in 1993, I've been selling real estate since 1989, but back in 1993, me and my husband actually bought a house in the Elk Grove area. And you're not going to believe this, but the interest rate was like double digit. I think it was like 10%. That was like crazy. And, we went ahead and bought the house. We liked the house. We could afford the house. And the payment was like only $1,300 a month, which was crazy back then for us, But we bought the house, and I think it was a good, choice for us.
So let me ask you a quick question, lender question. Did
Okay.
you have like a 30-year fixed on that house?
Yes, we did.
And just by looking at you, I am thinking that there is absolutely no way you held that loan for 30 years. You're way too young. What did you
No,
do?
no way. As soon as those interest rates came down, we got refinanced. And I think we even refinanced a couple of times because they went down to maybe 7, and we thought, hallelujah. we struck gold, and then they went down again and we refinanced again. But you know what? The value of the house kept going up. So we were good. And as long as I always say this, as long as you as a buyer, you're able to afford the payment, at least in California, the rate that the homes go up here, you're going to come out ahead in the long run.
I think that's great. Hey, Suzette, I'm wondering, do we have anything we can show the audience that kind of reinforces this that they can see?
Oh, you know what? That's perfect. I was just thinking about that. So let me go ahead and share some numbers with everyone. Okay, now this goes back to our question from last episode. Is now the right time to buy? And as a realtor, I really believe yes. Now, if you have the means, you have the money, your situation warrants you to buy a house in today's climate, then I say yes. So, Scott, can you explain these numbers on the screen?
Sure, perfect. So if you look to the left, right, if you were to buy a house last year for $601,000, give or take, interest rate, and these are just estimations in moments of time. So 3.5% was realistic last year for sure. If you bought that same house today for 699,000, you'd be looking at an interest rate of 5.125% or 5.125%. Now, what we've been talking about is Fed, inflation, rising rates. If inflation can be curbed, it may be a little aggressive, but for illustrative purposes, next year, that same home would be worth 740,000, and we're hoping that rates turn around and are down closer in the 4% range again. So that's just the numbers. I think the biggest takeaway here is to answer the question, is now a good time? So had you bought the same house last year, it would have appreciated almost $100,000. If you buy that house today, a year from now, you would look at a home appreciating about $40,000. That's in the 5 to 6% range of appreciation. That's an amazing opportunity.
Yeah.
That if you look at this, waiting means a pretty big opportunity missed in the home valuation.
Yes, that's true. And for anyone out there watching from another state, this is really California. If you go back 40, 50 years, California has always had like a net increase in value. And again, we're just looking backwards. That's not to say what's going to happen in moving forward. But we have a good prediction that yes, California values will continue to go up as long as people are earning the money that can pay for it. Okay, we're going to go back to the question. Is now the right time to buy?
Guys, while there may be some legitimate challenges right now, we both feel that the opportunity way outweighs those challenges.
Exactly. I feel the same way too. I also want to really state that there's two schools of thought. If you are purchasing a home for your personal use, yes, by all means, buy if you have the financial means to do that. Because as we showed you with the numbers, you're going to benefit in the long run. But if you're an investor, that's a whole nother world. Investors, they sell high, buy low. So of course, you're looking at the market in a different way. So again, we're really focusing on this episode for people that are buying and selling houses that for their personal use. So hopefully you got a lot of what we shared this episode, and we look forward to having you back again. So this is Real Estate Made Simple with Suzette and Scott. Please subscribe, ring that notification bell. Oh my God, we're going to come back with some really great information. So make sure you stay tuned.
And down below, there's our information if you want to reach out to us directly with any question, scenario, and we're more than happy to talk you through it.
Remember to subscribe.
All right. Thanks, guys. See you soon.
Bye.
Taking a chance.